the great threads on Twitter about this. Zero Hedge has been basically live blogging the events in a way that I think
By the way, I think it's important before you go into what happened.
Yep.
Why were interest rates, why had they not done an interest rate increase in 17 years? And why did they feel they needed to?
Right. I mean, so in Japan, you have, a population that saves a lot, a population that's not growing a lot. And so they've been battling slow economic growth and deflation for the better part of 15 years. And for the last 8 years, they've had negative interest rates. Right. So that is just a way to force people into the risk pool to try to get people to take risk and get your economy going and to keep it from deflating. Remember, like in some ways, this is what, we copied their experiment at the beginning of COVID. When everybody went into lockdown and wasn't taking any risk, we said, we'll pay you to take risk. And we took interest rates negative. Well, they're systematically been doing that for 8 years. Now, it leads to one of these very interesting consequences, which is when you have negative rates, i.e. you're paying somebody to borrow money, that leads to what is called a carry trade. So there are estimates that up to $20 trillion of yen was borrowed, and then you invest that in rate yielding assets around the world and you pocket the spread, right? So remember, just I think earlier this year, maybe it was late last year, Buffett borrowed $200 billion of yen denominated currency. So it seems like a great idea, especially if you're getting paid to borrow in Japan. So there's no cost to borrow in Japan. Then you get paid to buy bonds in the US. But you need to make sure that things don't change quickly on you. So the predictability of the rate environment in Japan is key. It's absolutely essential. And what scared the hell out of people is out of left field, the Bank of Japan raises rates. And all of a sudden, these people who were effectively borrowing in Japanese yen, assuming that rates would stay low and investing in these higher yields, they had to unwind these trades. And you had 20 trillion of these trades at play, according to JP Morgan. I think in the first 2 days, half of those trades they estimated got unwound. That means they had to sell US bonds, they had to sell stocks around the world, et cetera. And of course, that causes this negative reflexivity because you already have concerns about recession and the other things we've talked about. So this just adds to that list of problems.